Hello traders, Gary Wagner here for Trending Markets. Approximately 10 minutes after 10 o'clock in Honolulu, markets have just closed, and we do have the Dow Jones Industrial Average, U.S. equities, settling triple-digit lower on the day, and that's after being up around 100 points on the day, 16,664. That was the high on the day. So you can see we've had quite a range when we take a look at this market. First of all, you can see that as we look at a daily chart, we've been in this pattern over the last couple of days in which the market dramatically trades higher or dramatically trades lower, but in that defined range with real resistance at 16,500 and support at 16,000. When we extrapolate that to a weekly chart, I've gone ahead and pulled that up, you can see that almost all of the gains we made just the other day has almost been eroded. It is a green candle on the week, but it is at the lower end of the range. Most importantly, we could easily even go negative on the week, this only being Wednesday. Traders, that same kind of pattern or action is quite evident when we take a look at either a daily or a weekly chart in the Standard & Poor's. That is down 1.25%. off about 25 points on the day at 1941. I draw your attention to the weekly chart. We'll go ahead and pull that up. Very, very similar look to it. In other words, the week that we had 2 weeks ago in which we had this dramatic bottom come in, the very next week, of course, the market sold off, but to about the midpoint of that low, and now we're near that lower end of the range. Inasmuch as I have talked about the fact that typically when this market had some sort of a correction, we had this hammer-esque, hammer-like candle form on multiple occasions, we're not really seeing the kind of follow-through that we've seen in the past. We talked about that a little bit yesterday, and that is the following week was an up week in each of these occasions when you would see anything that was hammer-like, just following any kind of these shallow corrections that we had. Of course, this correction much more severe, actually coming in at about 10%. So very, very considerable drawdown, to say the least. Now, we did send out a special trade alert this morning. We did recommend entering the market on the short side in terms of the crude oil market. At that time, in fact, the chart that we sent out was this one, and it was sitting at 44.15, just as it is now. It wasn't updating properly. Market was anywhere between 27 and 37 at that point. You can mark us short at 44.20, 44.25, stops at 46.50. In terms of where I think we could see this market go, my initial target is going to be roughly at 42.53. That's the top of this candle. That's right before this big spike up. We're at, I believe, a fairly critical point, but the real point that we want to look at in terms of my belief of where it could go is about 42, and that is based upon these lows right in here. As we talked about yesterday, I'm looking at the S&Ps and also at crude oil as potential plays. I simply didn't think that the S&P has given us any solid indication that we have really had a key reversal and there isn't a distinct possibility of further erosion. And we saw that today with the market trading in a 400-point range, up $100, only to up 100 points, only to close off by 300 points plus. So for the time being, my recommendation is to maintain a short crude oil position. We are going to sideline from the E-mini Standard & Poor's 500 until we get a clearer indication of overall direction. Lastly, I want to take a look at a weekly chart. We've looked at this on quite a few occasions, but there is a pretty critical level, and that is 43.80. We're just shy of that, very, very close to that, and that's the point that I believe if we break below that particular price point, we should see a more dramatic sell-off in crude. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.